Thank you all for sticking through those commercial breaks. And I am excited to introduce our guest for today, Lawrence Fix the Money, Fix the World. He's an investment manager at Equity Management Associates, a sound money advocate. We have had you on the show once before. Thank you so much for coming and joining us
Oh,
again.
thanks. Welcome. Thanks for having me back. It's nice to be with you.
What did I miss when introducing you? I feel like there are so many.
No, you got it all. There's not much else. Um,
uh,
I'm the. You forgot the part about where I'm the gold guy who's trying to orange pill gold bugs.
and that is how you sort of came into the Bitcoin space. I
Yeah,
mean, you were pretty much all in on gold. Not to sort of recap or rehash that last conversation, but just very quickly, uh, let's do it like this. What would your pitch be right now to Peter Schiff as to why he needs to at least get some Bitcoin into his
yeah,
accounts?
sure. Uh, I'm not sure where Peter's hung up on this whole thing. I think it's his ego that's got him hung up, but and maybe he's just committed to his existing business. He doesn't want to change. But a lot of gold bugs, what happens is they can't get over the fact that it's not physical. They're kind of locked into a commodity money. And the notion of a ledger kind of escapes them, and the value of an immutable ledger is not something they fully understand. And so I start there and just say, look, before we even had gold, before we dug gold out of the ground, people kept score on caves. I killed two bison, you killed one, you owe me one, blah blah blah. So an immutable ledger that can't be changed, that's accurate and verifiable through thousands of nodes, is in a sense we've created something very very unique, which is the huge invention of Bitcoin, which is we've created digital scarcity, verifiable, secure digital scarcity, and therefore as a result of that, and then capping the amount of these things at 21 million, you've in a sense created a digital form of gold, a digital gold ledger. So they compete with one another, and what Peter's missing is that Bitcoin's enjoying two curves. I mean, gold has got a huge Lindy effect. It's fully distributed. Everybody knows what it is. Been around 5,000 years. That's the advantage it's got. Obviously, that you don't have to tell anybody that gold is money. Everyone knows gold is money. Bitcoin is on an adoption curve. I mean, it is sound money, and it's as sound as gold right now. When the next halving occurs, it'll be sounder because the stock to flow will drop. But the issue really becomes, right now, probably a couple hundred million people understand it. There's 7 billion people on the planet, and there are only 21 million coins. And as everyone comes to understand the values of these monetary properties that these coins have, there's going to be an adoption curve. And so, with a fixed supply and continually growing demand, you can tell what's going to happen to the price. And so that makes it, and that's why it's outperformed gold since it was introduced. And it's going to continue to outperform gold. Now it's going to be more volatile. And 80-year-olds, shouldn't be putting 100% of their money in Bitcoin because 80-year-olds don't like having 50% drawdowns. But everybody should own some Bitcoin. I always say that the only wrong answer is zero. If you've got a one, a two, a five, a 10, I mean, I have a pretty high allocation to it because I'm risk prone, or I'm very comfortable with the risk. But you need to own some of it. So and I'm not quite sure why Peter can't get over it. I mean, it's funny his son gets it, right?
At this point,
Do
it
you
just
think?
feels like a bit.
Yeah, I mean, it feels like it's part of his brand, right? Like,
That might be
yeah,
right. Yeah.
yeah, he has to maintain this frame, even though I mean, I suspect separate from his son that he is actively invested in Bitcoin, but his entire enterprise is based on the idea that he's painted himself into a corner, and I think that there's
Maybe
no
I'm
way that
not,
he
I'm
can.
not so sure of that though. I've met him and I know him pretty well. I read him as a pretty arrogant guy, and so I think he might believe his own bullshit.
He's so deep in the lie that he doesn't know what's fact and
Yeah,
fiction.
yeah, and I found that kind of universal in trying to orange pill people. The people who are the most arrogant seem to be the slowest to get it. You kind of have to be open minded to it as a possibility, and the more humble you are, the more likely you are to understand that, oh yeah, things are changing and this is a difference, and it's got value, and therefore I understand it. A lot of people, some people are just plain afraid of it, and I get that too. I mean, look, when Dogecoin and all the other shit coins were doing all that stuff, you basically had every sound money guy in the world going, how can a digital asset be sound money? Look at this crap. And they're right. I mean, it's the shit coins. It really annoys me the way the shit coins have cast a poor light on the one thing that really is a true technical innovation and is not a shit coin. And so it's, to me, there's Bitcoin and then there's all of the crypto, and all of the crypto is, kind of a speculative mania. Bitcoin is actually, real signal and a real technical development that's going to be extremely important, in my opinion. So,
I'd love to, get your thoughts on what is strangely become the most looked forward, most anticipated Fed meeting in my lifetime, possibly in your lifetime. We will be Chris will send us an update in about just over 30 minutes when the minutes are released and we actually see the official call
yeah,
on what the rate hike is going to be. I don't want to spend time speculating. I'd rather just get your thoughts on how the Fed has been handling, the economy for some time and what your expectations are on how you're preparing for the immediate and near term future. I would say the next
sure.
18 months.
Yeah, good questions. I mean, look, the Fed's an unmitigated disaster, right? I mean, it's a money cartel. Their only job really is to look after their owners, which are the banks and Wall Streeters, and they run this boom bust cycle, and they I mean, it's unclear. I mean, we know what they do, and it's unclear what their motives are. I mean, some say they know exactly what they're doing and they're quite evil. Others say they're stupid, and they don't really know what they're doing. I'm between those two camps somewhere. I think there's a certain element of stupidity. I mean, Jay Powell's a lawyer. I don't think he really understands or has studied economics or markets. So I think he's kind of coming at this with a very simplistic point of view. But having said that, he also is a political animal, and he's doing what he has to do in light of the circumstances. And so, he thinks he can do it. He can become another Paul Volcker, which is ridiculous. He can't. And so, as I've said in the past, what I see him doing is they're kind of driving this clown car between the two guardrails. I mean, when you've got a credit expansion similar to the one we just had, when you had as much easy money as we just had, I mean, zero interest rate policy from 2009 to 2015 or 16 was just an enormous crime and led to enormous misallocation of resources and created what we now all call the everything bubble, and the everything bubble has burst. And so, there's you can't really put the genie back in the bottle. When a bubble bursts, it's going to collapse all the way to the base. And and by the way, what they're doing right now is helping speed up that collapse. So I'm not sure, again, if it's stupidity or it's intention. I mean, one could argue that their intention is to speed it up, have everything collapse, then reset with a CBDC, or, rich people get buy all the assets for 10 cents on the dollar. I'm not quite sure. But the point is that, if they continue the policy, they're going to continue. The stock market's going to implode. And I actually think the stock market's going to probably implode either way. I think one thing that everyone's missing is that you can't have a bubble of the proportions that we had, which I don't think anyone would disagree that we were in a bubble, and everything bubble based on free money. And then you can't break that bubble, which was clearly broken, right? There's no going back. Crypto is the leading edge. You could see all that implode, but it's flowing through to everything now, including, small countries like Sri Lanka, not small, but, periphery countries like Sri Lanka. And, when a bubble bursts, you're going to go from massively overvalued to fair valued or undervalued. I mean, in the case of the '08 bubble or the 2000 bubble, the stock S&P went down 50% in both cases. Right now, the S&P is down roughly between 15 and 20%. It needs to go a lot lower, and it's going to go a lot lower probably soon. My prediction on today is that he's actually going to shock the market, go 100, and be a tough guy. Um, because that's in type with what he's been doing recently, and he wants to make the point and try and get inflation under control. And there's also a national security aspect to it. I mean, they're hoping that doing this can really kill enough demand to get oil prices down, so that Putin makes less money selling his oil. And of course, so there's this whole geopolitical ramification. I think their view is, well, if we've got to have some unemployment and sacrifice all the speculators and stock market people, so be it. Powell's rich, and it's like, well, whatever. So it's a really really screwed up system, and sadly we're all forced to live with it, and we're forced to, it's like I was going to tweet this morning, like it's like watching the when they change popes, and we expect to see the different color smoke come out of the chimney of the Vatican. I mean, And that's what this is like. I mean, our grandkids are going to say, "What you guys let you let the entire world economy blow up because you had, the most important price in the world, which is the cost of money, set by a committee that was, run by a banker cartel and the government. What the fuck were you thinking? I mean, you know, that's like the dumbest idea since forever. And so that I mean that's coming, but sadly we got to get through this, right? Um,
I love
and
that analogy of, we're just waiting for the smoke to come out of the chimney for a new pope.
right, yeah,
Um, Larry, I wanna unpack something you said where if Powell actually does follow through and keep going at the rate he's going, that being raising rates and continuing to try to crater the stock market and potentially the broader economy with rising unemployment, his other option would be to reverse course and
right.
reintroduce liquidity into the market. But would that not also just have the same effect? And if so, which one do you think, now we're going to speculate a little bit, which one do you think would in turn cause the collapse of the dollar quicker?
Boy, I don't know. I mean, it's very, very hard to know we're in this period of incredible volatility. Everyone's seen the Mermacan chart on Twitter. I mean, when monetary systems blow up, it's like look out because there's a lot of volatility in both directions. And so if he continues down the path he's continuing down, the market's going to look like 1929. I mean, we're going to have an out and out credit collapse. There's going to be contagion, and one guy can't pay his debts, so person who owes those debts loses money, and you get laid off. I mean, it's going to be a spiral. It's going to look like 1929, and nobody was alive during 29. My grandparents were alive, and I heard a lot of stories from them. And the fact of the matter is, I mean, there were houses. I mean, houses that were selling for $40,000, like the one my grandfather bought. In 1928, were selling for 7,000 in 1933. I mean, and people felt lucky to have a job. They felt lucky to have any kind of income. They were all living on just reduced rations, so to speak. If you read history of the Depression, I mean, parts of the country where people would have starved if they hadn't been able to shoot small animals. I mean, it was really pretty damn bad. And so um, that's where we're headed if he continues to blow up the system the way he's blowing it up. I don't think he will continue all the way through. I think eventually, when the bond market goes, which it will, he will be forced at that point to pivot and support it. And this next particular pivot will lead to a much larger amount of money. I mean, one thing, Preston Pish said this. I think it's a really brilliant analogy. He said the contractions are getting closer, and we've all, well, not all of us, but I've been around when my wife gave birth, and as the contractions get closer, you're closer to having a baby. And so, in 2000 we had a contraction, in 2008 we had another one, and 2020 we had one, and now I think we're about to have another one. And things are getting closer, and you see the parabolas of a lot of these lines. I mean, prices in a lot of areas are already starting to touch on the edge of a hyperinflationary environment. So things are happening, things are blowing up. And as to which makes the dollar fail faster, that I've always said, and I really strongly believe this, the dollar is going to fail when a majority of the people realize that you can't trust the Federal Reserve to control the printing of money, and that they're trapped, and that they will always go to the default condition of printing more money. And when they do that, everyone who has any savings, and that's not everybody because a lot of people are just net in debt, but anybody who has any savings will, under a Gresham's law like scenario, recognize that they have to put their savings into something that cannot be debased, and that's not the dollar. And the three leading candidates are Bitcoin, gold, and silver, but real estate qualifies because you can't print real estate, and food and commodities and even cars. I mean, things qualify. And those that's all part of a crack up boom. If everyone starts just spending their money the minute they get it, that creates more inflation, more demand, and it's a crack up boom. So it's a just I've never seen anything like it, and I can't believe they ran it this way. I can't believe they let it get this far, and I can't believe how ugly it's about to get, and how few people fully understand how ugly it's about to get, and whether that is in the form of massive deflation or massive inflation or both. I mean, I think there's a chance that everything you own will deflate in price because nobody will have the money or the credit to buy it. Banks mortgage rates will be higher. Banks won't be able to make loans. They won't want to make loans. They'll be afraid of the risk, etc. So, your house, your boat, your car, whatever the stuff you own will be going down in value, but all the stuff you need to live, the food and the gasoline, the heating, etc., that'll all be going up in price because, I mean, the thing that the Fed doesn't realize is that this wrecking ball policy of swerve one way, swerve the other way. I mean, you're destroying demand. You're destroying businesses. I mean, how do businesses exist? I mean, we already know there are a lot less restaurants because like a lot of them got wiped out when we had COVID, right? And so, I mean, if you're a business person in this environment, it is extremely tough to know what to do. I mean, home builders 6 months ago couldn't get workers, couldn't get lumber, couldn't get anything. We were having a hard time getting houses built, and they didn't know whether they should start the next project. Recently there was a big Twitter thread that showed that they're all like, "Hey, who turned out the lights?" We got no demand. We got plenty of workers. We got all kinds of, and I mean, it's very simple what happened, right? 30-year mortgages went from 3% to 6%, almost 6%. So it's just an incredibly effed up system, incredibly effed up. And so, as investors and participants and so on, I mean, what we've got to do is, you've got to make sure you got a job that you think is going to be around, even in a downturn. So, the more essential your job is, the better off you are. And then you got to make sure that you're not levered because especially with respect to sound assets, because if you've got hard assets but you're levered and they go against you, you can get carried out. I've seen that happen. I mean, all the people who were following the Plan B nonsense, they levered up their Bitcoin thinking it was going to 150, and they got blown out. That's really sad, right? I mean, it's so. Um, which makes the dollar fail faster? I don't know. And one thing is for sure. I mean, I did something with Brent. Um, I forget his last name, but I did something with Brent. San Diego Capital, Brent Johnson yesterday, and how fast this thing fails, I don't know. I mean, it should have failed years ago. I can't imagine they're going to keep it long alive for more than a few more years, but they've got a lot of tricks up their sleeve, and they'll try and use them. I mean, I've seen they'll do whatever they can. I mean, they've got a lot of privilege, they've got a big system, and they've got a lot of wealth tied up in it, and so they're going to do everything they can to try and tilt the table in their favor. I mean, Roosevelt did it with confiscating gold, and they'll do similar things. I mean, I can see bad stuff coming as times get worse, but I also know that, if we hodl sound assets, on the other side of all this, these sound assets, I think will be the things, I think we'll be very glad we did it. And we've got the best chance of getting through this with our wealth intact or and possibly even really growing your wealth. I mean, if you actually look at the depression, there were a lot of great fortunes made out of the depression. I mean, if you had cash or you had the ability to buy assets cheap, there were people who got rich, and the same will happen this time. But it's going to be tough. There's no doubt about that.
There are a few different directions we can go from here, but
Sure.
I would love if you could actually for like I've spent negative amount of time understanding bonds. I'm more of an equity guy. I understand
Right.
the importance of them. So when you said earlier about how the bond market may force Powell's hand, what are you looking for in the bond market? Is there a certain level you want to see yields get to or are expecting to before Powell pivots, or what does that statement mean?
Great question, and it's really important. I don't think enough people focus on the bond market. Greg Foss talks about this a lot. I mean, bonds are actually more important in some ways than the equities. They're smarter and they lead it. So here's the deal. I mean, the 10 year is in the 2.95 or 3% area when inflation's last print was 9.1. So that's an enormously terrible deal to own a 10-year bond, right? And one could argue the 9.1's understated, but whatever. The bonds suck, and yet there's a certain category, a certain number, or certain investors out there need to buy bonds. Insurance companies, others need to buy bonds, and of course they do. But as it becomes more and more apparent that buying a bond is a bad deal, that you're going to get repaid the principal because the government can always print the money to pay you back the principal. But the question is, what's that money going to buy? And so, um, as that becomes more and more obvious, I believe the Fed will actually, quote unquote, lose the bond market. And by the way, they kind of did in March of 2020, when we had the COVID crisis and before Powell came in with his Draghi-like imitation where he said, we're going to do whatever it takes to keep the economy and the system going, the bond market went no bid for a while. And they even commented on the Fed minutes. It said, there were, concerns that there were no bidders for the bonds, and there was really effectively no market. Well, guess what? I mean, the U.S. government needs to have the bond market function. Without the bond market functioning, the U.S. government can't. It's just it doesn't exist, and no one will get paid, and no money can be printed. None of it. The whole thing collapses. I mean, this kind of is the 2008, where they said the ATMs won't work if we don't keep the markets stable, and so. What could eventually happen, I believe will eventually happen, it goes back to what I said earlier about Gresham's law. Enough people come to see that, you know what, these bonds are a bad deal. I'm not buying them anymore. And you've already seen that. Foreigners were net buyers of bonds all the way up to 2014, and that shifted at the end of 2014. And so now the foreigners have not been net buyers of bonds. In fact, they're net sellers. Russia's taken theirs down, in Japan, because they're having their own troubles, they're having to sell them. China has been letting theirs run off, et cetera. So if the US bond market goes no bid or goes closer to no bid, and the only buyer for US bonds is the Fed, well, that's kind of, emerging country, banana republic, Argentina, Venezuela, Zimbabwe sort of stuff. I mean, if we are printing money to make our interest payments and to make our bond payments, and it's very obvious that we're doing so. And it's relatively obvious we're doing that to a degree now, although that waxes and wanes. And they have a lot of ways of disguising it. I mean, as they say, they claim they're not printing money, but they create reserves for the banks, and the banks effectively lend against it. And so that really is growing the money supply and creating money. I mean, there are a lot of peas and shells here. They move around to try and confuse us all. But the bottom line is that what they're trying to do is keep everyone from realizing the bond market's in trouble. And as the bond market gets in trouble, and you ask the question, how high could rates go? Well, rates at 3% are somewhat problematic, but if you consider that our debt is $30 trillion at the government level, approaching 31, and you take them to say 4, 5, 6, I mean, so let's take five as a reasonable number, because I think it's a long-term average that, 10 years been around there. So five times, so that's $1.5 trillion in interest payments alone, as against last year they were like 660 or something. So that would add another $1 trillion to our deficit. And if, Rogart and Reinhoff have studied it and written books about it and so forth, they've basically shown anytime a government gets this upside down, I mean, like in 20 out of the last 20 cases, when you have this much debt and you were running a negative, you were running a deficit of say 10 or 11% or more, we're not there yet, but we will be with this downturn. You effectively, you're guaranteed that you're either going to go bankrupt and default, or you're going to have to inflate it away. And in both cases they're the same thing. I mean, what I think will happen is I think they will basically have to go to yield curve control. I mean, Japan has already done it. Yield curve control means that they'll say, okay, these bonds, we're not letting them go any higher than 3.5%, because if they did, that would be a problem. What that means is anybody who wants to sell us your bonds for a 3.5% yield, we'll buy them. And eventually the bond market's going to look at the Fed and go, you know what? Sold to you. You can have all of them. And so the Fed balance sheet, which is now about $9 trillion, it's going to go to 10, 15, 20, 25, 30. That's all just money out of thin air that they've created, or credit, I should say, out of thin air that they've created, put on the bank balance sheet. So, and at that point, everybody, I think, comes to the conclusion that they can't ever stop. And so remember that money is a collective delusion, in the sense that money has value because we all agree it has value. I mean, in the US case, it's because we have a military and a big country, and we're productive, and we got 200-year history and theoretical rule of law, blah, 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 which has all gotten very debased. But still there's a lot of resiliency there. And so people think the dollar has value. But it's not beyond the realm of imagination that eventually everyone could come to the conclusion that the U.S. government and the U.S. dollar, they're not credit worthy. They're just not credit worthy. And so people will eventually get to the point where they say, I've got to protect myself. And that's the rush. That's where everyone makes that's the change. So it's a psychological phenomenon, Q. It's people have to come to the view that their dollars aren't going to hold any value, and they want out. And when that occurs, it's all over. It's all over for the dollar, and we'll have to do a monetary reset. and we will. That's what will happen next. We'll have a, we'll probably do the right thing after everything else has been tried. We'll reset to a sound money standard. Hopefully, it'll be a Bitcoin standard. It might be. They might try gold in the interim because of the history of gold and all the boomers believe in gold. But or it could be a basket of commodities. There are a lot of ways of doing it. But we'll have to go back to a sound money standard because this unsound money has effectively ruined the financial world, and the event we're about to experience is going to be worse than what we saw in 2008 by an order of magnitude, and it's probably going to be worse than what they saw in 29. So you know it's not a great situation, to be honest with you. They've painted us into a corner, and or they've painted themselves into a corner, and we're all going to suffer as a result of their stupidity, and a broken system.
So I'm going to play devil's advocate, and I have to
Mhm.
caveat it by saying there is not a single thing, Lawrence, you have said that I disagree with.
Mhm.
I've long believed that the next iteration of the dollar is some sort of a basket of sound money, most
Mhm.
likely gold with something else like Bitcoin involved, and God knows whatever else they want to mix into that pot to dilute it. Um, I want to, however, get your thoughts on just you know you brought up the fact that the US dollar is really backed by our military, but there's another thing, in my opinion, that really gives the dollar its strength. And it's the fact that on the global oil market, we use the petrodollar system. We've
Mhm.
started to see Putin really poke a hole in that and saying, like, don't give me any dollars. Give me anything but dollars. And how did the ruble respond to that? It hit a 5-year high after
Sure.
this announcement. So what's to stop these other oil producing countries from not accepting dollars anymore, from saying, I want gold now instead? And what effect would that have on the dollar on a global stage if that were to happen?
Well, nothing's to stop it, and we already see it. I mean, you know, the Russians are taking rupees, Indian rupees, in exchange for oil. They're accepting all currencies really, other than the dollar, and that's going to continue. And it has to continue because the U.S. has used the dollar as they've weaponized the dollar. I mean, we grabbed their reserves, and we've made it very clear that that the dollar is our currency, but their problem, and they're going to say, fine, we're not going to accept your currency anymore. You want to do trade with us, you got to give us something real. And that's really what Putin's move was. He recognized that he had a piece of the puzzle, and he recognized that we had financialized the U.S. has financialized the world for its own benefit for many, many years, and has been passing bad checks. These diluted dollars, and he had the real stuff. He has the physical, and everyone thought, well, we can still bully this guy around because, what do they say? Um, it's the place is a gas station, right? I mean, that's more or less what Russia is, and it's not. Um, it's the resources they have are badly needed by the world, and he's basically just said, I'm not going to play by your rules anymore. And if you want the stuff I've got, you've got to pay me in something that I know will continue to have value, because I'm not going to continue to accept this paper that you've been putting out there. He also knows how out over our skis we are in terms of how much paper we've created, and how undervalued oil is, and how undervalued gold is. And so he's got both of those. His country produces gold. His country produces a ton of oil. His country produces a ton of natural gas. And so he's just said, I'm not playing by your rules anymore. And everyone, I mean, America being arrogant thought, oh, that's no problem. I mean, he'll fall quickly. I mean, I remember the Wall Street. I talked to some guys on Wall Street, and they're like, oh yeah, no, they're grabbing all those yachts so that the oligarchs will just overthrow him. Well, he's got great security. And and they were like, he's not going to last, and he'll fall apart, and all this, that, and the other. Well, he's been doing reasonably well, and I'm not saying I like the guy. I don't think he's a particularly good guy, but in terms of the way he's played his hand here, his cards, he's not losing. Germany's in a shitload of is feeling a shitload of pain, and they're going to feel a shitload more. if they don't start, playing more by his rules. And so, that he's pointed out the cracks in the fiat system. And as a result of that, um, he's going to change the way business is done, and he's already changed it. It's going to change more. So your point about the dollar being the king and being the reserve currency of the world, sure. I mean, 10 years ago, I think it was 95% of transactions in the world, no matter where you were, it was denominated in dollars. I think that's down into the 60s now. I don't have the exact statistics, but it's fallen quite a bit. And I think it will continue to fall. I mean, they're talking about trying to do a BRICS currency. I mean, look, they haven't done it. It's going to be hard to do. There are all kinds of problems associated with this. But I think it's very safe to say that, there's been a very big question mark thrown into the global economy about the soundness of the dollar and whether that's really the right basis on which to be doing trade. And so I think you're going to see, I mean, just our grabbing his reserves was an enormous deal, right? I mean, what do you think the Saudis are going to do? I mean, what do you think the Indians are going to do? What do you think Brazil is going to do? I mean, any country in the world that runs a trade surplus, and leaves it in the Western system is going to say to themselves, can they do that to us too if they don't like our politics? So there's a lot of reasons why the dollar is slowly but surely losing its position. But these things don't happen overnight. I mean, it's going to take a few years, I think, to completely unfold. The next two big trigger points, in my view, is gold's got to get through 2000 with authority and stay there. It's been there three times. It was there in 2011. It was there in or in 2020, and it was there earlier this year. And now it's taking a big whack back. But when it comes back up and goes through that again, it'll be game on. And then I suspect when that happens, Bitcoin will follow soon thereafter, and Bitcoin will go to a new all-time high. And I think those two things doing it will be your best indication. And in the same breath, I think what will have happened is the bond market will have rolled over, interest rates will have continued to go up. That'll put the Fed in a very tough position where they're probably forced to implement yield curve control. And the economy will have rolled over and the stock market will have rolled over. And so all that lost wealth will suddenly, be making 1929 look, very comparable to the situation we're in today. And at that point in time, it's all bets are off. Who knows what happens? I mean, sadly, in the past, when these kinds of things have happened, these kind of fourth turnings and things of this level, that's led to a war. I'm hoping that won't occur this time, but it's probably not unrealistic to think that it would occur. So,
What makes you say that that gold will sort of lead that charge? Why would gold lead the charge versus
well,
Bitcoin?
because it's bigger and it's more fully distributed. It's interesting. I think this is something that Bitcoiners don't really see, because I have a couple of good friends that are. I mean, I'm very heavily Bitcoin. Don't get me wrong. I think Bitcoin wins. Okay, but I'm also in the gold business as well and gold stock investing. And 2018 was when gold started to move and it started to work, and it could kind of smell what was coming. And so my fund had a really good year in 2019, when we were up 97% or something, and then in 2020 we were up 120%. But in 20, but throughout that whole time frame, if you go look at the chart of the price of Bitcoin from in 2019 and 2020, it was kind of stuck between 5 and 10. It just kind of bounced around back and forth, back and forth. And then, as you recall, in late 2020, it really took off like a bat out of hell, and it went from 5 or 10 up to 50 quickly. And but at that point in time, gold had already made its move, and gold kind of stalled out at 2050. So my point is, I think, and this is true. I've observed this having been an investor in gold market for 20 years. Gold can look around. The gold smells what's coming, and it looks around the corner even before something happens. If the price of gold is going up, something's going to happen. And so it just tends to be more fully distributed, and it tends to kind of be a good leading indicator of what's going on. And if the price of gold is going up, there's trouble somewhere coming. It's almost a guarantee. And so, and what I think is with the Bitcoin case, it came after the fact. So, gold worked for 2 years. It went from 1365 into the 1900s and then 2000 in 2019 and 2020. Bitcoin was stuck for all of 2019 and the first 3 quarters of 2020, and then it exploded to the upside. So I just, based on market patterns and the way things have happened in the past, I tend to think that gold is going to lead this next upturn in the sound money category. And it's going to, people in the Bitcoin community are going to go, hey, what the hell's going on? Gold's working and our thing's not. And then eventually gold's going to start to slow down, and gold and Bitcoin's going to come in, it's just going to blow it away. And so in my view, in this next leg up, gold will probably go up to 2,500 to 3,000, and Bitcoin is probably going to go to 200,000. But I don't think Bitcoin's going to do the 200. I think Bitcoin's going to find a level around 30 or 40 sometime in the next year or two, and bounce around in there for a while as gold continues to march. And then at some point, Bitcoin's going to go from 40 to 200, just the way it went from 10 to 50, because that's the pattern it seems to follow. Basically, it'll trade sideways for quite some time, and then suddenly, everybody realizes what it is, and it just takes off like crazy. And there's a fixed supply, right? That's the bottom line. There's a fixed supply. So that's kind of how I see it.
I just want to,
Interesting.
sorry to cut you off, Pete. I want to remind everyone. I see a lot of people asking the chats. We are 5 minutes away from the Fed minutes being released, and then we will get the official word on what these rate hikes are. Please, if you are not already, feel free to subscribe. Press the subscribe button down below. Um, Lawrence, I want to pose, unless you have more thoughts on the gold of it all, I wanted to pose a question now, just about the the possibility. Again, playing devil's advocate here, not my personal belief,
Yep.
but the possibility that somehow the Fed actually gets this right. That, a broken clock is right twice a day, and somehow
Mhm.
Jerome Powell got it right. And in my opinion, I kind of think the scenario they need to get it right is actually a world war. Like, we need to enter a full blown war to ramp up all of our production capabilities and in turn revitalize the economy. No different in the same way that we kind of got out of the Great Depression by getting so heavily involved in World War II. Do you think that's a legitimate thing that's being
Yeah.
discussed?
Well, I don't think that, I wouldn't call that getting it right. I think that, um, and I think, but I do think a war is a possibility. Yeah, yeah, I think there's almost no chance the Fed gets it right here, because I don't think they know what they're dealing with, and I don't think I really don't think. I mean, the only way that they could quote unquote get it right, and the odds of this are zero, is they could confess to what they've done wrong, and they could do what Roosevelt did, and they could do a monetary. They could try and have like a Plaza Core. They could do a monetary reset, right, and have another Bretton Woods, and say, okay, look, we built up too much credit. We've levered the thing up way too much. The money's unsound. We all know it. It's all going to fall to shit. Here's what we're going to do. We're going to have, $5 old equals $2 new, and the new dollar is going to be backed by a basket of gold and Bitcoin and oil, or whatever. We're going to create a sound money standard on a go forward basis, and we're going to migrate to that. And there would obviously be winners and losers in that. But on the other side of it, we'd have a sound money, which would lead to this kind of a problem, this kind of, unsound money and swings and credit creation and everything that we've had. It wouldn't occur again. And so that's the correct solution. The odds that they choose that, I mean, they're zero. They're gonna run the thing into the ditch, one way or the other, either through hyperinflation, depression, or probably some combination of both. And then perhaps, yeah, we have a war to get us out of it, or to end it with finality. Who the hell knows? I think war is a little harder. I mean, so, there are psychopaths in the world, and there's no doubt that, in a centralized world, psychopaths can do a lot of damage. I mean, take Mao or Hitler or Stalin or anything else. I mean, I think we've evolved beyond that a little bit, and in the sense that now that we have nuclear weapons, and even psychopaths don't want to blow each other up, or end the world as we know it. So I tend to think that, and we all need each other in terms of supply lines and so on and so forth. I mean, we couldn't really even have a war with China right now, because half the stuff we'd need to fight it, they produce. So, and I think the Pentagon knows that. And in turn, I think, they know that they've got one hell of a social problem. If they don't, I mean, they've given their people a big, I've been to China many times, and they've given their people an enormous increase in living standards over the past 20 or 30 years. But those people are really appreciative of it and enjoy. And if suddenly that starts to go away, they're not going to be happy campers either. And the Communist Party is not going to have as much power as it had. I mean, the thing we're seeing going on, in my view, is we're going from centralized systems to decentralized systems. I mean, we reached peak centralization in the 20th century, right? World War II was the culmination of, we can kill 50 million people in 5 years. Wow, aren't we great? And since then, everything is we you know we've seen the diseconomies of centralization. I mean, centralization was great when Henry Ford figured out if I put people in a line, have them do the same thing over and over again, I can produce a ton of cars very cheaply, right? So centralization is bad when it gets so big, so sclerotic, so political, that and so available to abuse, that you can get a guy like a Hitler who can get control of a big industrial economy and decide to start killing people en masse. And so, you know, fortunately, we've got these two decentralizing trends, which I think are going to save the world. The first is the internet, and the second is Bitcoin. The internet's going to save the world because it's made Joe Rogan more powerful than network news, and the entire, um, you know, um, the entire mainstream media, and it's allowed us all to share information. And then Bitcoin is important because it's sound money that the government can't fuck with. And gold was sound money that the government theoretically couldn't fuck with, but because it was centralized and kept in vaults, and because they created paper gold, they learned how to fuck with it pretty well. Because if gold were priced today the way it was priced in 1971, it would be $80,000 an ounce, and it's two. So they've done a pretty good job of suppressing the gold price in order to keep their fiat system going. And by the way, they're going to try the same thing in Bitcoin. I mean, there's a futures market developing in Bitcoin. There's no doubt that there are projects within all of the governments that are in the fiat business to figure out how to grab and participate as much as possible in that futures market to discourage people from buying Bitcoin. So it's tricky. It's tricky, but I think the thing that the people who run the system have is they've got a lot of the power, they got all the levers, they got a lot of money, and they're going to cheat. But the thing that we have is we've got truth on our side, and there are a lot more of us than there are of them. And the pitchforks are going to come out. I mean, when things get pretty tough, I wouldn't want to be them. I'd much rather be us.
So
So it's I think there is a good resolution to this problem, but that's not to suggest that it's just going to be a walk in the park for the next 5 or 10 years as we solve it. I think it's going to be pretty fucking brutal,
Absolutely.
so
to be
I
honest with
think
sorry to
you.
interrupt you guys. I want to make this as timely as possible. It is now made official that the Fed is going to
Yeah,
raise rates 75 basis points. So
yeah, I
this is
just
in
saw that.
line with the market expectations. Um, I'm keeping an eye on just the broader indices, and it's been a green day. And my expectation, quite frankly, going into today was, so long as the market is not shocked, it will respond positively. And then tomorrow, when everyone wakes up and realizes what a 75 basis point rate hike actually means, I expect more blood in the streets tomorrow. So, uh, Lawrence, earlier you mentioned a possibility of a 100 basis point rate hike. I was kind of hoping for that, quite frankly. Um, where do you think? What are your initial thoughts hearing that it's now official?
Yeah, I'm surprised. I thought he was gonna go 100 as well, but you just don't know. I mean, these guys, you know, and what will actually matter more too is the press conference. So that's going to come out in half an hour. We're going to get a little bit more color on what he's thinking. I mean, if he says they become data dependent, he might as well have said they're going to taper very soon. In which case, everything's going to rip to the upside.
interesting.
Gold, silver, Bitcoin, the market, you name it. We'll see. I mean, the thing that's so tricky about this whole problem and this whole issue is it's all iterative. I mean, they, just like we do, they watch the markets, and if they don't get the reaction they want out of all of these different statements and moves, then they send guys out a day later to start making statements, that are
Exactly.
either hawkish or dovish to try and, they're trying to manage the markets too. I mean, you
It's all
know,
a narrative game.
yeah, to your point about can they stick the landing? I mean, yeah, I mean, look, it's theoretically possible that they can continue to kick the can down the road. I mean, I thought it was all over in 2008. So I mean, they've done a lot of can kicking, and they'll probably do some more can kicking. I mean, we know they're going to try. But with every kick and every problem that gets slightly larger, and as the credit gets bigger and bigger. I mean, look, we started off back in 2000 with a Fed balance sheet of $800 billion, and now it's 9 trillion. And the next big mistake or blow up they're going to have. I mean, when something occurs here, the market falls a lot, or Japan goes tits up, or something else. I mean, there's a possibility we're going to start buying Japanese government bonds to prevent Japan from failing. So, the 9 trillion is going to become 13, and then the 13 is going to become 20, and eventually it's going to be $100 trillion, and gasoline's going to be $15 a gallon, not five. So, you can kind of see where this is going. What you don't really know is the slope and the steps. I mean, that's, um, they do their best to try and, they're, like I say, they're driving a clown car on an icy road, and they've got the two guardrails. One's extreme inflation, the other's extreme deflation. And they're just trying to keep the car on the road. And so they'll jawbone and do whatever they have. If it looks too deflationary, they'll have a Plaza Accord, or they'll do a Shanghai Accord like they did in 2016 when oil was $30 and U.S. shale was going to go under.
Wait, what can you what was
Turn of
that
it.
specifically? What was the accord?
Well, the Plaza Accord goes back even further, but the one that's really more relevant is the Shanghai Accord in 2016. I mean, in 2016, they had serious deflation. Gold was down, everything was down, and it was really a deflationary time, and they knew it. And they realized that if they didn't get some inflation going, get the animal spirits going, that the whole entire U.S. shale industry was going to fail. And so they basically went out and said, we got to weaken the dollar, and they took all kinds of actions in the FX markets to do so collectively. And that's the thing. The thing that we don't see and we don't know is and they have a lot of tools, and they have a lot of offshore accounts, and they have all the big banks to do their bidding for them. And so they basically will take steps as necessary to try and influence the markets if they think they've gone too far one way or too far the other way. Um, and so we can count on that.
I want to read a couple more statements coming out of the minutes. And just a reminder, Powell has not yet started his press conference. That will be at 11:30 Pacific, 2:30 Eastern time. Setting up for September meetings that further interest rate hikes will be needed as inflation still runs high. The quote is, they anticipate that ongoing increases in the target range will be appropriate. So it looks like these rate hikes are not going to be slowing down. There were some expectations. I know yesterday we had a conversation with Ansel Linder about the possibility that they may just pause rate hikes. They may not increase, they may not decrease. From the sounds of this, from their own minutes, it looks like we're going to see another rate hike. We don't need to speculate on that, but I want to just get your sense of what these repeated rate hikes could mean. I mean, the last time they really tried to do anything like this was 2018, and the president at the time threw a little bit of a hissy fit, and they reversed course very quickly. So,
Right.
what do you think is going to happen? We're leading up to midterm elections. September, you're 2 months out from said midterm elections. So, do you think there's going to be any influence by the president or just Congress in general to see any changes by the Fed stance?
Yeah. So yeah, they are political. I believe that, and I do think that there's a chance that they're going to feel pressure to do something before the election. To pivot or to go the other direction. And yeah, they say they have to say they're going to do more rate hikes because the inflation problem really hasn't been fully addressed. Whether that really means they will do more rate hikes or not, who knows? As we've seen, they can change pretty quickly on a dime. So one of the things you alluded to is that something could break here. And, that to me is the interesting question. Is something going to break? I mean, you're already kind of seeing things break. I mean, the Italian yields have blown out. The ECB had to have an emergency meeting to deal with that. Japan has had to spend huge amounts of money to, do QE to keep their bonds in a fixed place. They want to have their 10-year at 25 basis points, which is ridiculous. I mean, the ECB just raised rates from minus rates to zero, which is nuts. And they committed that they're going to do unlimited QE as necessary. I mean, there's really no slowing down worldwide in the printing of money. It's just different countries take different leads at different points in time. I mean, right now, in theory, the Fed is starting to have their balance sheet run off. We'll see. There's a delay in the closing of the mortgages, so it hasn't started to fully show up yet. But in turn, the ECB and Japan are printing like crazy. So there's always, and the euro market, euro dollar market's a huge market. So there's always more money coming into the system to keep the system alive. So it's extremely hard to see, what they're going to do next. It's just, in fact, it's impossible, and that's what makes it so hard for business people and others to efficiently allocate capital and do the right thing. I mean, we live in this, this matrix, which is a hall of mirrors created by them. And so, to me, the faster the system fails, the better, because we want to get to the other side. The other side's got a better system. But guys, I think I told you earlier, I've got a hard stop. I got to go for another call that I'm running a little bit late on.
No,
So,
no worries at all,
um,
Lawrence. Do you
yeah.
want to just quickly let everyone know where they can stay up to date with you on socials?
Yeah, so I'm on Twitter, so at Lawrence Lepard on Twitter, and I tweet a lot. And then if you go to my website, EMA2, EMA and the number 2.com, there's a lot of free stuff on there. Quarterly reports, Bitcoin papers, macro stuff. It's all just free. It's I run a fund that invests in sound money things. So if you want to see what's going on, in the fund or our views on things, you can go to the website and check it out there. So, all right.
Awesome.
Thank you so much for joining us.
Okay.
This has
Hey,
been an
thanks,
amazing
guys. Really
conversation.
enjoyed it. I'm sorry I couldn't stay longer, but
We're gonna
got to
ping you
dash.
to have you come back, but thank you and keep doing all that you do, man.
Thank you. Take care. We'll see you. Bye bye.
Adios.